say you're more patient or more impulsive when you're trading?
I'm definitely more patient.
How do you usually feel during a trade? Are you calm? Are you stressed? Are you excited? What's the emotions going through Mohammed's head?
I'm definitely calm. I'm getting confident. I'm seeing it. I'm back testing. Even though I'm not taking these trades, I'm journeying.
What time frames do you usually trade?
So I look at weekly just for the weekly candle close. Daily, I look at just control of the market. 4 hour, I look at market structure.
Boom. So you can see, as long as liquidity is being taken along the way, price doesn't need to come all the way down. The condition confirms the type of trade you're going to take. If this is happening in your key time window, the trade that is now presented is a counter trend trade.
I would wait for price to take this low and tap into this POI and look to buy. Oh, so it has to be an Asia.
Yes.
Oh, I didn't know that.
So that's what the issue is. This is Mohammed. He says he's been struggling with execution in his trading. And in this video, we're going to help him fix that issue and also see if there are any other underlying issues that he is unaware of. So without further ado, let's get into the video. I'm here, joined by none other than the one and only
Mohammed Ba'alawi.
Amazing, brother, amazing. Talk to us. Where you from, first and foremost?
I'm from Yemen.
From Yemen, okay, representing the homeland. We love to see it. We love to see it.
You know.
Whereabouts are you from? Where did you grow up? Tell us a little bit about your upbringing.
I've been living in the UAE all my life, born here, and hopefully I'll die here as well.
Whoa, hopefully I die here. Whoa, how do you get there?
I just love this place, bro.
Amazing. I second that. How old are you, bro?
I'm 21.
Okay, amazing stuff. Young. I was 21 years old when I first started my journey of just trying to pursue, the online space of entrepreneurship. So, yeah, man, you're very, very young. I don't want to talk like an unk, but you're very young, bro. And you're in a very blessed position to be at this age, discovering this online money-making space, this online entrepreneurship space. So, I'm very excited to see what the future has in store for you, bro. And in today's video, we're going to be going through where you're currently at in your trading, your strategy, what you're struggling with, what your pros are, what your cons are. And it's going to be almost like a little trading therapy session.
Okay.
So when you think about this video, the vibe is it's going to be a nice therapy type of session where we actually break down your issues in trading, not only within yourself, but on the charts. I'm sorry to interrupt the video, but listen up. I've just partnered up with Funding Pips. So go ahead and use my code YU20 for 20% off of all of your Funding Pips prop firm accounts. Make sure you read the rules, follow the rules. And if you follow the rules, you will 100% get a payout with no payout denied. Go and see their payout history. In a time where the prop firm space is shaky, make sure you go for the top prop firms in the space. If you move cheap, you will pay twice. Don't pay twice, pay once. Use my code YU20 for 20% off of all of your Funding Pips prop firm accounts. Let's go. But before we get into technicals and before we get into the charts, I want to ask you a few questions that's generally going to help me understand you a little bit more. And in order for this video to work out very, very, very well, I need you, bro, to be completely honest with me.
Okay.
In these answers. Because if you're completely 100% honest in these answers, it's going to allow me to really see where I can help you personally. Okay?
Okay.
And I want you to be completely open, even if the answer is wrong, even if it's against yourself, even if you know this is not the right answer, you shouldn't be saying this, you shouldn't be confessing this. Confess it.
I'll tell you the whole truth.
Yes, because this is going to allow us to get to the real issue of how we can help you in your trading. Okay, so Mohammed, would you say you're more patient or more impulsive when you're trading?
I'm definitely more patient. Definitely.
Why would you say definitely?
I think it's a bad thing too, because I end up missing lots of trades being too patient. I'm being too, I try to be as perfect as I can be, and that leads me to lose trades. Because I have accounts that I'm literally going on for months on. I'm not passing, I'm not progressing, I'm taking trades, I end up break even.
What's the longest you've kept a prop firm account for if patience is sometimes not working in your favor?
I have one now since last year. It's still with me.
Okay, that's not good. We'll get there. Okay. Second question I want to ask you is, how do you usually feel during a trade? Are you calm? Are you stressed? Are you excited? What's the emotions going through Mohammed's head?
I'm definitely calm. I just wait. I just see. I just sit and wait. But I think I have to be more aggressive with my trading. That's why I really
Do you
think
say
there
that
should be
because you
time.
feel like waiting has, hasn't served you well enough? Like, do you
Definitely.
overweight?
Overweight, definitely.
Okay, okay, that's not good. What do you do after you lose a trade?
I journal. I built a
Okay,
journaling app for myself, so I
that's good.
just journal, collect data and stuff. So
You
I just,
built an app for yourself?
yeah,
You build apps?
yeah. No, I don't build apps. I use the AI, and
Okay,
it built a website for me where I
okay,
can journal my trades and stuff. And I put the pictures, how was my psychology during the trade session and everything like that. And I definitely do journal.
that's great. That's great to know. So you're actively taking steps to fix these issues. Okay. Do you tend to stick to the plan, or you find yourself adjusting your trade mid-trade?
I'll say 50-50.
Okay,
Because sometimes I stick to the plan and sometimes I don't want to miss the move. I'm like, you know what? I waited too long. It's been 2-3 weeks. I haven't taken a trade. Let me just take this one.
mm-hmm.
Because now I'm just like, I don't care even if I lose.
Yeah,
I just want to take a trade at this point, you know?
mm-hmm.
And I think that's why I said I need to be more aggressive with my trading because I'm definitely good at catching the direction. I'm really good with my analysis. It's just I'm stuck at executing.
Okay, I got it. Are you someone who likes rules, or do you generally prefer flexibility, just in life in general?
Both. It depends on the situation.
Give us an example.
Like with life, I like being flexible. I don't like being ruled over. I don't like being told what to do, as in, I like being me. And I don't like to change stuff because of rules and have to change my personality or change who I am. But then if it comes to trading and stuff like this, I'd rather follow rules because I know that's going to get me where I want to be. So it depends. Like in location freedom, I want to be free. I want to be financially free. So I'm flexible with it. Like I'm working side to side, doing some freelance work to get money to afford these challenges.
Mm-hmm.
So I'm flexible. Like I'm not like, oh, I want to trade. I'm just going to trade.
Okay.
So I'm going to do something meanwhile I trade. And at the same time, with the trading, I prefer having rules, having a structure, and having everything clear.
So when it comes to general life and your personality, you like to be flexible. But when it comes to being in an industry that requires you to have rules in place in order to succeed, you respect that and you understand that, so you're willing to have those rules.
Yes,
Amazing. That's
definitely.
great. That's great to know. The next question is, what's your current strategy in simple terms?
Yeah, so I look at what's the condition for the day, and I try to position myself to get the most probable trade of the day. So that's my strategy.
Okay.
Higher time frame, I look at the market structure, the control of the market.
Mhm.
Then on the 15 minutes, I
So
look.
that's the next question.
Okay.
What time frames do you usually trade?
So I look at weekly just for the weekly candle close. Daily, I look at just control of the market.
Mhm.
4 hour, I look at market structure. And 1 hour, I do the refinement of the market structure. And then 15 and down, I just look at the condition at 15. And then for executing, 5, 3, and 1 for the minute.
Just like me.
Yeah, I learned it from you. So
Like, I appreciate it. So the next question is, what's your entries based on? What type of entries do you have? What type of entry models do you have?
So I have one that's like based off medium inducements. There's two types of trades. If there's a medium inducement and there's a POY, I'll just take it straight off that POY. But if there is not, I'll look for a two legs protocol and then look for inducement, like the two for two induce and go down if that was shorts. And if it's a continuation setup, I'll profit, like I like to see price go above the 50% of the Asia range, and I'd like to take a trade if I see a POY over there in the
Okay.
Asia session.
That's for your London setups, yeah?
Yeah, for the London setups.
Okay. Do you have fixed risk per trade?
Yeah, I risk at 0.90%.
0.90.
Yeah.
Is that 0.10 accounting for spread?
Yeah.
Okay. Got it. Good. Do you track your trades or journal them? You already answered that.
Yeah,
You
I
have your
do.
own journal. Okay. Great stuff. How much do you risk per trade?
That's the same, right? 0.9%.
Okay. How do you decide your lot size?
So I have the long position and the short position tool on.
Yeah.
I have it like it shows me. So I just put on the stop loss and it calculates it for me.
Amazing. What's the most amount of money you've lost in a day?
$560
Okay.
because I trade on a 50K account.
Okay, got it. And at what point do you stop trading for the day?
After I've taken the maximum losses for me for the day. So I like to. Sometimes I
And
have it
that's your maximum loss, yeah?
my maximum, not the
Not the
profit.
profit. Okay,
Yeah.
good.
So I like to trade twice a day. So basically, one shot for London and one shot for New York.
Is there any specific reason why?
Now I feel like if I took so many like trades and I forced them, then I'm gonna lose more than I should.
What's so many for you?
Like 3 trades in a session is so much for me because like I can't risk 1%, 1%.
Yeah, 3 trades in a session, that can be much.
Yeah. So
But 3 trades or 4 trades across 2 sessions, is that much? I'm just asking.
maybe if I reduce the risk, initial risk, and take like 0.4, yeah, I can do that. But if I'm risking like 1.9, I don't like it. It's not good on my psychology.
Okay, good. That makes sense. Based off the 1% risk, basically,
Yeah.
you're losing 4% is kind of crazy. You're right. That's good. What would success look like for you in trading? Think about it.
Like,
The life of Muhammad.
is trading. I love trading and I'm really passionate about trading. But I know trading is not going to be everything because I'm not going to lie. I do have ambitions. I do want to do so much out of life. I'm taking this trading thing as a vehicle to get me there.
Good.
And life right now, honestly, with trading is just being comfortable. But definitely being able free to do what you want whenever you want and be with the people you love and be able to help them and push people to go forward. That's something I really believe in. I feel like if I succeed in trading, I know it will help my people who are with me to see like, yeah, you can do this.
Are you trying to make side income or go full time with trading? What's the goal?
Definitely full time
Okay.
because it's my passion.
But if you go full time, does it reach a point where you now use trading as a vehicle to get you to the final destination, or are you trying to go full time temporarily?
Temporarily, as of
Okay.
now. Yeah, I definitely want to go full time.
Okay. And what amount would you be happy with monthly?
Monthly, I would say, as of my situation, it depends on the situation.
Your situation.
Right now,
We're speaking about you right now.
right now, I'd be happy with 5, 10K.
A month.
Yeah,
Just from trading.
just from trading.
Great stuff. And how quickly do you expect to get there?
I believe I can do it if I really put my head down in these 6 months. And you guys are gonna watch this. 6 months. If I really do what I say I'm gonna do, I'm gonna do it.
And how long have you been trading so far, so people don't think you can just come into this industry and
So it's
make it out in
been.
6 months?
I got into trading 2023, but I was lost.
Mhm.
I was watching YouTube videos. I couldn't really afford to get into YU University at that time.
Mhm.
So I waited. I spoke with some close family relatives. I told them this is what I want to do. Take a chance on me and people in my life to help me. And I got into YU. And then where things started changing is when the remastered version came. When that came, it changed how I viewed the market because it was more defined than Wyckoff. Wyckoff was confusing for me. Like as much as I tried to understand it, I couldn't.
So you couldn't really, like, the old course didn't really click in your head,
It
but the
didn't
new
really.
remastered version
Yeah,
gave you what you were looking for.
yeah. Because even though I had the course, I couldn't take it as serious because I was backtesting. I have videos of me in my room backtesting for hours, trying to figure it out, but it was not clicking. And I started going to different YouTubers, like watching different channels. But then I was like, if you're gonna go here and here, you're never gonna get anywhere. So I was like, let me stick. At the time when you dropped the remastered, you gave it for free to the people who got the course. So I was like, let me give this a chance again. Because I was like, nothing's making sense. I'm going somewhere, but I'm not going somewhere. I watched that. I was like, yeah, start to get cooking. Because it started clicking.
start seeing
I'm
results.
taking notes. I have my notebook with me. Notes.
You have it with you?
Yeah.
Let's see the notes.
And it's not like I did it multiple times, not once. I watched these
Yeah,
videos.
let's see the notes.
I have a bigger one where I used to draw the patterns.
Yeah.
'Cause it's
So
also my,
so this is just your small notebook.
yeah, this is it's like my personal journal. I just keep it when I trade. I write things and stuff.
You want to show the camera?
Yeah, look, this is M15, all that stuff from Yarimi's course. All this is from the course, by the way.
Amazing. Great stuff. Great stuff. Okay, so it seems like you're doing all the actionable steps to get to, your goal, which is great to hear.
Yeah.
And so when you got the remastered version, when you joined the new program, that's when it clicked for you?
That's when it clicked for me, definitely. because I saw a better understanding to the market, and I could definitely read the market. Like I knew
Confidently.
confidently, I know. I'm looking at this. I'm telling people, look, this is gonna happen. This is gonna happen. Did you enter though? I'm like, nah, I didn't enter, but I'm getting confident. I'm seeing it. I'm back testing. Even though I'm not taking these trades,
Yeah.
I'm journaling. Okay, this happened. This happened. This happened. I was going through my old videos because I record myself trading and stuff. Old videos. I'm like, okay, this was the medium inducement. It used to happen all the time, but I never knew this was this.
Yeah.
And I'm starting to realize, okay, I'm clicking this with this. It's very easy for people to understand. Really easy.
Amazing. I'm happy to hear that. But anyways,
Yeah.
moving on. I don't want people to think this is a course promo. We're not about to-
Nah, bro, I'm
here-
not getting paid.
Yeah, we're trying to fix you. We're trying to fix your strategy. What's the biggest thing holding you back right now? Honestly.
Definitely execution. And I'm getting better at it now, but definitely still.
Okay, great stuff. I'm asking you these questions because whilst I'm asking you these questions, and I'm going to carry on doing this along the series, guys, I'm asking these questions so I know what path to take when we hop on the charts. So today's session is most likely going to be focused on straight execution, entry models, so on and so forth. If I watched you trade for a week, what mistakes would I see?
Definitely see me let setups go. Even once I get my confirmation, sometimes I don't take it.
Okay.
You'll see that I miss so many setups because I'm hesitant. And I think psychologically wise, I recognize this pattern with me, with everything I've done with my life. And as I realized this with my life, with all the other things I've done, because this is not my first time trying to do something with my life. Since I was a kid, you know, when you did the Zoom call, you was like, I did this, I sold stuff in school. I did the same, you know, I did this, I did that, I did that. And my mother used to say the same. This guy's doing this, tomorrow he's doing that. This one, so I'm like, so I went this path. I tried like doing a SMMA, business, agency and stuff like that. I didn't stick to it. Although I did give my best, but it just didn't click with me. And I've always been passionate about trading. I have people in my family that trade. I don't know if you know Saud Ba'alawi. He's really big. You can Google him up. He's like one of the first people in Dubai to trade for Sheikh Mohammed, like Nasdaq and stuff. So I was always passionate about finance. But I realized I needed to work in the inner me. It's not just trading. Definitely. Before your life changes outside, it changes inside.
Before you look at internal structure, you got to look at yourself internally.
Exactly.
You know?
That's why he's my mentor.
Oh my God. So the biggest thing in trading holding you back is execution.
Yeah, execution.
Right? And what's one habit you know you should fix, but you haven't?
Stop being hesitant.
So it sounds like technical analysis is not the issue here. It sounds like you being hesitant and watching trades leave, although you know this is going to play out. It sounds like that's the problem. So let's get into the charts and see how we can fix this.
Let's go. Let's do it.
Perfect. Okay, so bro, in a scenario like this where you have a bullish market and price is making higher highs and higher lows, so in a situation like this, what would you need to see in order for you to take a buy?
So definitely depends on the time of the session. Where are we at the session? Where are we in the market?
Yep, go ahead, show us.
Yes, I was saying like we have our kill zones, right? Let's say this is 8 till 11. If market, let's say this is Asia, right? If Asia does this and we're back here, I would wait for price to take this low and tap into this POY and look to buy. Because I know during my kill zone, this would be maybe a previous daily low. So it's we classify that as a medium.
As in you would say that this would be a previous daily low?
Yeah.
Okay, good stuff.
This is a previous daily low. So I'd look at this and classify it as a medium inducement and take it off a demand zone.
Why would you take a buy?
Because we induce the sellers who
Okay.
probably is an early buyer trap. People would look to buy here early. We induce them and then we go up because we need liquidity. The market needs fuel, and we take that fuel and then we shoot up.
Okay, so in this scenario here, what confirms that price is bullish for you?
So it depends on the zone. Let's say this zone here, it's the move that caused to this uptrend.
Okay.
So now I
what's-
know
And what's that move?
it broke structure. It changed character.
So show us, mark out everything you're saying.
So we say we have this change of character over here, and this is the break of structure, right?
Mm-hmm.
BOS. Now I know, okay, here Asia is liquid, like generating liquidity. Price ends up taking this previous daily low, and then we enter of this demand that created the move to the upside, taking these early buyers, and then we go up.
Okay, good stuff.
And sometimes it can be even New York low. So maybe I'll target the New York low. I know price likes liquidity, target this New York low, and then shoot up.
When would you target New York low? If London, as in if London opens high,
Yeah.
to take a sell to New York low.
No, I'm saying that during Asia, right, we're up. We're in an uptrend, and we have this low.
During Asia, we're what?
Look, Asia, we're here, right?
Yeah, but in Asia, price wasn't in an uptrend in Asia.
Yeah, it wasn't in an uptrend. So I wouldn't be I wouldn't be interested in looking for sells because I like being pro-trend.
Now, but what I'm saying is, in order for you to take a sell to a New York low,
Yeah,
what would you have to see in London?
to a New York. Well, I didn't get your question. Hold on.
So, for example, here, let's go back.
Yeah.
What would you need to see in order for you to take a sell to a New York low? Because you said you can also target that low as a New York low.
Oh, okay. So let's say in our session, in London session, targeting New York lows, right?
To explain whatever you said before, I'm not sure.
Okay, so let's say Asia does this.
There's two lines here. Use that as your kill zone.
Okay, so price was moving bearish. Like internally, we had basically we have market structure phases. We have the reveal of intent, then the retracement, and let's say now we had that reveal of intent over here, and price right now has to do the retracement.
Okay.
So we have our basically change of character, break of structure, and then we're far from the New York low, let's say. So I'll be like, okay, my condition for the day is a continuation setup. So I'll look for this.
But why is your condition a continuation setup?
Because there's no medium inducement shown. So it's like a counter continuation.
No, but a pro-trend continuation is when the medium inducement happens in Asia.
Oh, so it has to be Asia.
Yes.
Oh, I didn't know that. So I thought if there's no medium inducement, then it's a continuation setup.
You see?
Yeah.
So that's what the issue is.
Okay.
So in order for you to take a pro-trend continuation, the medium inducement has to happen in Asia.
Asia.
For you to take a pro-trend reversal, the medium inducement has to happen in your key time window.
Okay.
Okay, so let me quickly show you an example of that. Okay, what do we mean by that? If I just quickly show you a bearish example, let's take a look at price. Let's say, for example, now price is bearish. Price is making lower highs, lower lows, lower highs, lower lows, lower highs, and lower lows. The first thing you want to ask yourself whenever you pop up during your London session or your New York session within your kill zone, the first thing you want to ask yourself is what? What is the overall direction of the market? Who's in control? Here you can see bears are in control. So what? Price is bearish. That's the first question you ask yourself. Once you know who's in control, you understand, okay, when my kill zone opens up, I know that I want to trade in favor of who's in control. So let's say, for example, now, this was the previous day, for instance, and now price is bullish all of a sudden. And let's say this is Asia now. Asia opens up, okay? Let's say this is Asia. Okay, Asia starts doing its nonsense, but it's forming some sort of structure towards the end, right? But Asia does something like this now. Okay, this is Asia. Okay. Asia causes a medium inducement that mitigates what? This overall level right here. Okay, now you have your London session that kicks in right here. This vertical line represents London. So during a kill zone now, what do you get? You look for that confirmation to do what?
To go down, right?
To go down. Why? Because you understand the overall condition is what?
Bearish.
Bearish. Price created a medium inducement sweeping the previous day's high or structure on what time frame?
15.
The M15 on the previous day. Okay. And not only that, it did that and mitigated what? Mitigated that overall level. Sometimes it doesn't mitigate the overall level. Sometimes it can just wick above previous day's high or structure from previous day on a 15-minute and then give you what? One leg to the downside, two leg to the downside, some sort of an inducement, and then your entry will be somewhere up here. But sometimes it might not do that. sometimes what might it do? Okay, let me take my rectangle tool. Sometimes price can just mitigate your zone, give you 6 steps. 1 leg, 2, 3, 4. That usually invites what a type of trader like break and retest. 5 pushes away, but look at the information within here. 5 does what? It breaks structure again to the downside, inviting who? Traders that want to get in at a level of supply like here. But then the high of 5 is used as what? Liquidity. Price induces that, mitigates that level right there, and then that's your entry right there to take price lower.
Okay.
So during a London, this is your London pro trend continuation setup. Why is it pro trend?
Because it took the previous structure during Asia.
Asia. No, it created a medium inducement in
during
Asia.
Asia.
So
Okay.
now here, this is when you can take price for a good risk to reward ratio. You're 1 to 10, you're 1 to 8, you're 1 to 15 even. You're going to be ambitious.
Yeah.
But to be safe, what do? You just take partial profits at 1 to 3.
1 to 3.
Let the rest run to full TP. Don't make your full TP in a pro trend continuation at Asia low for a sell. It's gonna go beyond that. Okay, majority of the time it's gonna go beyond that. So what do I like to personally do? I like to target a New York low from like one of the previous days. Let's say there's a New York low resting somewhere here. I'll target that.
Okay.
Why? Because it's pro trend. There's a lot of volume that's about to kick in the market. So that's a side point, but that's just how you identify. Does that help a little bit?
Yeah, I see where my mistake was. I classified the continuation setups wrong.
You classify the continuation as just any retracement.
Any retracement, yeah.
Do you see? So now let's focus on the issue of entries. Before we get into our chart example, let's just take a look at this, okay? This is one of my entry models called the 2 for 2 entry model, yeah? As you're a little familiar with. So here you have, let's say in a bullish market, you have price pushing to the upside. 1, 2, 3. Okay, we know this is a low that led to a high that broke above this high, and it leaves us with what? A beautiful POI right here. But how many times have you waited for a POI like this to be mitigated, but price doesn't even just mitigate it?
A lot.
A lot, right? It just comes deep and then just pushes away, gone. Okay, and this is the reason why we have this entry model. But what do we have to see? We need to see a relevant inducement. Every single time price just creates a low that leads to a high, I don't care if price just mitigates it like this. I'm not entering from here. I need to see a relevant inducement. Okay, and that's why I have this entry model, because price will usually come into a level like this. Okay, push up. Okay, come back down. Once it comes back down again with fuel, okay, I'm gonna enter the trade. I'm now interested in entering this trade. Why? Because it's not just a mitigation of this level and a push away. No, a certain type of trader is being induced. Okay, in this trade, it might be a break and retest type of trader. Okay, it might be what? Price coming in, creating relatively equal lows, giving hope for who? Support traders. Also who? Traders that are gonna trade from this level of demand. Just traders trading demand for absolutely no reason. Okay, so how are they invited into the trade? Whenever price comes back in to a level like this, okay, the demand traders are invited here. Not only that, the support traders get 3 taps. 1 tap, 2 tap, 3 taps. So they get a fake reaction for price to then induce and mitigate my zone. Now I'm interested to take a trade from here, or my 2 for 2 entry model shows me what? Shows me what? Let's say now I have a level of trend line, for example. Okay, I have a level of trend line. 1, 2, 3, price pushes up. Here's my level of trend line. What do I know about trend line? How do you correctly wait for an inducement of a trend line?
The point of
The
origin.
point of origin. Where is the point of origin? If this is 1 tap, 2 tap, 3 taps. 1 tap, 2 tap, 3 taps. You need to see the point of origin get taken away. So in a scenario like this, because a lot of people miss trades, they'll see price break structure. Okay, they might even enter early again when the price comes back into here. How you avoid this is simply by understanding, okay, this entry model. It's a 2 for 2 entry model, which means what? It's your execution entry model where you're entering on the inducement. It's an inducement execution entry model. So here, if I know the point of origin of trend line is going to be taken out, but I also have a level of demand, how do I know if the demand is even going to hold? I don't. So what I'm going to do to give me the most probable scenario is take the trade the moment the point of origin of the trend line is induced. So boom, here, I'm placing my long position tool right here. Okay, my long position tool is going at the trend line low, and I'm going to have my SL below the level of demand.
Yeah.
So that does what? It allows me to be in the trade if the trade begins to move in my favor, and it doesn't allow me to miss the trade. Okay, and I'm taking the trade from a level where price can reverse. Why? Because liquidity rests at this trendline low. So now the moment it does that, price will usually just pinch. Does it make sense now to why sometimes
Yeah.
you might miss a trade if you just wait for this demand?
That's why I
Sometimes,
love 2 for 2 a lot.
yes. So that's why now price will come in, take that liquidity, pinch it, push to the upside. And why is it called 2 for 2? Because now you're looking at relevant internal levels. If you miss this initial inducement entry model, you have the high, the internal high, that led to an internal low that not only broke below this low, but it caused the inducement of the point of origin of the trend line. So now you have this low that led to this high that broke above this high. What do you do? Same thing. Wait for an invitation of a certain type of trader. Break and retest in a scenario, for example. Why? Price broke above this internal high, came to retest it, pushed away from it, and now what do I have? I have this overall level of demand. Now I can take the trade from that level of demand, or I can take it from the inducement. It just depends on the risk to reward. If the risk to reward is good enough, I'm going to take the trade from where? From the inducement of that low. Put my stops below this low. But if the risk to reward is bad, I'm going to take my trade directly from the level of demand, the new demand that's created, right here. Boom. Right here. Boom. SL goes below this low, and I can target.
Oh, so you wouldn't put it on the original low?
No, because price already mitigated that. It doesn't
Yeah.
need to come back there again.
صح. It's protected خلاص.
It's protected. You see, it came from an inducement. It's an inducement POI because that low right there induced this level of the trend line low, the point of origin. Does that make sense, bro? So here now, let's look at. So that's one example. Another example is what? My impulse candle entry model. So here now, if I have price pushing to the upside with volume, okay, we know that what? This high, this low that led to this high is compiled and formed with multiple candles. It came from multiple candles. You're not going to see one crazy move that just leads to a high. You will sometimes, but usually, if this is the 15-minute time frame, this will be made up of 5-minute candles, 3-minute candles, 1-minute candles, so on and so forth. So in a scenario like this, bro, what you want to understand is you want to look at what candle is responsible for breaking above a level. Let's say, okay, this is a high, this is a low. In order for price to break this high, it needs to be made up of a few candles, right? So you might see a normal candle like this. You might see another candle like this. And then you might see what? An impulse candle with a lot of momentum like this. Okay, that breaks structure. I hope this is making sense.
Yeah, it's making sense.
Okay, so what I like to do here, whenever there is a candle that's responsible for breaking above a candle, it has to be majority body. It can't be majority wick. Because what do wicks show? Just like a real life
Weakness.
candle. Weakness. Just like a real life candle. If I buy a fresh candle now from the store and I light up this candle, what's going to happen to the wax? The wax burns. It burns and it melts. When the wax burns and melts, do you have more wax or more wick?
More wick.
You have more wick, which shows what? Weakness in the amount of wax that's left. It shows what? This candle is not going to last any much longer. It's the same thing with trading. If you have a candle that is what? If you have a candle that is majority wick, shows signs of weakness. So that's why with this impulse candle entry model, I want to see a momentum candle that is majority body. People think momentum candle is just straight body. No, it can have a small wick. It can have a small wick, which shows us what? Price are going to continue in that direction for a minute because there's a lot of volume. And if this candle is the one responsible for breaking above this candle right here, what do? We mark out the candle prior, okay? Take a rectangle. You mark out the candle prior, okay? Let's say, for example, if this candle here, I should have moved it a little bit left, but let's say it's this candle here. Mark out the candle prior, wick to wick, and you extend right. So now whenever price pushes away and it comes back to this level where there's a candle prior to impulse, I'm entering directly. I don't need confirmation. Why? Price already created a low that led to the high that broke above this high with the impulse candle prior, wick, direct entry, boom, I'm gone. The drawing is so bad. This should have been a bit more to the left. It should have looked like this.
Yeah, but it's making sense.
Yeah, okay. So now let's show you a live chart example of this. So here, what do we have? Very, 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 very clean. Very clean. Yeah? Over what we spoke about. This is a low from the previous day, Thursday. And this is what?
The This is called.
Okay, this is daily low of Thursday,
This is Monday.
and this is Monday. Okay, so market opens. What happens during Asia around about that time? Price takes out that low. So when price takes out that low, what does it set us up for in London?
For buys.
What type of buys?
Continuation buys.
What type of continuation?
Continuation buy.
Pro what?
Pro trend.
Pro trend continuation. Why? Because the medium adjustment happened when?
During Asia's.
Okay, great stuff. So now here we have what? Here we have, as we marked out, this low that led to this high in Asia that broke above this high. Then we have what? Just pay attention to this. It happens time and time and time again in the market. Every single time this is taking place. Okay? Look, even during Asia, what's happening here?
We're breaking structure to the upside.
We're breaking structure to the upside. But what candle, if I go to the 3 minute, okay? Or I'll go to the, let me go back to that 5 minute. So here, if you take a look at overall structure, here what do you have? This is a high that led to a low that broke below this low. This is a high that led to this low, okay, that broke below this low. This is a low, led to a high, broke above this high. Not only this high, it also broke above this high. What is the candle that is responsible for breaking above this high?
This one.
Where is it?
This one, yeah.
This candle, right?
Yeah.
So what do we do?
Look at the candle prior to it.
Okay. Look at the candle prior to it and do what?
And take a trade from there, basically.
In our kill zone, but because it's Asia, the concept still stands.
Yeah.
But we're not taking it in Asia. But what do we do? Mark it out as what?
Mark it out.
From where?
From the wick to the low.
From the wick to the wick.
Yeah, wick to
Okay. From wick to wick. Extend it right. So what do you see here?
price.
Price holds and acts as a POI. Because it's in Asia, it's going to act as a POI. Wick to wick, because this candle is responsible for breaking above that. Is this candle majority wick or majority body?
Majority body.
Majority body, right? So it shows what? Signs of bullish strength. So in this scenario now, we know we're not going to take a trade. Why? It's not in our key time window. So waiting for our London kill zone. In our London kill zone, this is 8 a.m. right here. I'm simply waiting for what? A type of trader to be induced. Simple. What can I see? Relatively equal lows. Price takes out the equal lows. After taking out the equal lows, what does it do? Creates a low that leads to what?
A new high.
A high that breaks above a high here that breaks above this high. So now, the golden question again. What candle is responsible for breaking above this high right here?
This one.
This candle.
Yeah.
Is this candle majority body or majority wick?
Body.
This candle right here, right? This candle right here is majority body, right?
Body, yeah.
So what do we do?
Look at the candle before it.
Look at the candle before it, as you can see, with our rectangle tool, and we mark it out from what?
Wick to wick.
From wick to wick. Extend it right, and just to be safe, you can have your SL below this overall level.
Can I ask you a question though?
Yeah.
You see the setup you took, it makes sense, but shouldn't we wait till it like reaches the 50 range of Asia before we look to take like a continuation setup?
Okay, so look in this scenario now. That's a very good question, by the way. But as long as you're getting valid inducements and valid mitigations that respect overall order flow, in this scenario, bullish order flow, you don't need to wait for a deep retracement into where? Into 50% of that Asia range. You don't need to wait for that. Why? Because look at what's happening along the way. And look at the inducements that's happening along the way. Okay? For example, here, what do we have? What do we have here? We have price creating a low that leads to a high. Price ranges, takes out the range low to mitigate what? Candle prior to the impulse that we marked out. Not only that, price then creates a what? It creates a low that leads to a high right there. Okay, that does what?
Break of structure.
That breaks structure. Then price creates what? An area where there's relatively equal lows right here. Price induces that to then do what? Okay?
To break again structure.
To break structure again with this impulse candle, candle prior, boom, boom. So you can see as long as liquidity is being taken along the way, price doesn't need to come all the way down. And this is the same misconception a lot of people have as well. They think that every single time price creates a low that leads to a high that breaks structure, price needs to come all the way deep to 78.6.
Yeah.
No, institutions like to get involved where? They like to get involved anywhere below the 50%, okay? Below the 50%. In what? In a bullish market. But as long as, okay, meaning what? Below 50%. If this is a low, this is a high, and this is 50%, institutions want to get involved below here. However, if there are scenarios where you can clearly see, okay, let's say we say time and price, right? If your kill zone is right here, this is your kill zone right here. This is 8 a.m. for example, yeah? And price is coming down, okay, price is coming down, and I see a level of equal lows induced within my kill zone, then price just randomly pushes away. Sorry, that's a bad example. So let's say, for example, here, 8 a.m. is approaching, right? Here, if price comes down, okay, my kill zone opens up now. During my kill zone, I see relatively equal lows. Price just pinches it, for example, pushes to the upside, gives me another invitation of break and retest. I can now look to take the trade from here if price comes here. Why? Because price isn't just going to open up in my kill zone and do what? Create a new low that leads to a high that breaks above this high for no reason. The timing, that's why time and price together are so important. Okay? This is probably just going to be temporary, a temporary move to the upside to facilitate what? This will probably be a temporary move to the upside to facilitate what? The overall direction of where price came from, for example, a level like this, to then use what? This as a medium inducement. So you look to enter here.
So buy to sell.
It's a buy to sell. You look to enter here, you target this medium inducement. Once that's swept, this is now your entry. Why? Because it's still within your key time window. This is now your entry to do what? To take the sales to that downside right there. You see?
Okay, makes sense, yeah.
That makes
It's
sense.
clicking.
So it's a bit complex, but
because I always end up missing trades like this as well. Because I see that, okay, I know direction's going to go up, but then I don't get the retracement that I feel satisfied with,
Yeah.
and then price just leaves.
yeah,
And then I go on the Discord and I see people entering. I'm like,
yeah.
I'm just supposed to wait for the 50.
We're gonna go over this again properly in today's Zoom call later on tonight. But remember the condition, okay? The condition is built from your Asia session up until London. All the info from Asia to London is your condition building up. The condition can either be a pro trend continuation, pro trend reversal. It can be a ranging market. If it's ranging, you wait. If it's a pro trend continuation, that means price caused a medium adjustment in Asia. If it's a pro trend reversal, that means your medium adjustment happened in your kill zone. So, and counter trend is also a condition. So in this scenario here, what can you see? The overall direction is what?
Bearish.
Bearish. But here you can see what? Your key time window is here. The condition only shows you what? The condition confirms the type of trade you're going to take.
Yeah.
If this is happening in your key time window, the trade that is now presented is a counter trend trade. So you just cap it at 1 to 3.
Makes
In
sense.
this scenario, you cap it at 1 to 3. Why? Because if this is still mitigating within your kill zone, now you've got a medium inducement in your kill zone. And in a rare scenario where price opens up like this, in the beginning of your kill zone, at an accurate time, you know, okay, the condition for this is a counter trend trade. So you just target that medium inducement right there. Okay?
Because then price might reverse from there.
Exactly. Okay? You can target that as long as it aligns with the 1 to 3. Because it's a counter trend. Keep it at 1 to 3. Unless it's my other model, which we'll speak about another time. Okay? But here, that's within your kill zone. So you can enter that as your counter trend. Why? Because you know sellers are in control. So this buy won't last a long time. But now if you get a mitigation of this, and now you get a medium inducement in your key time window, you can now sell. This is now your pro trend reversal.
Yeah, I see.
And now
it,
you can target long term.
Now I can go for the 1 to 3 and 1 to 10.
Exactly. Now you take 50% at 1 to 3, and the rest you can cap it at. It doesn't have to be 1 to 10. You can be at, for example, like a New York
Lows,
low.
yeah.
Okay, let's say for example this is a New York low. You can look to target that New York low from this London mitigation.
Yeah, it makes sense. Yeah.
Make sense?
Yeah, makes sense.
So practice that impulse candle entry model, bro. That 2 for 2 entry model, and get good at understanding your condition. And it's game over.
Inshallah.
Yeah.
It's a pleasure, bro.
I appreciate you, bro, man. How do you find the session?
Amazing, bro. You know, I came here and I told my mother, because I watch my videos with her. I'm like, this is my mentor.
Yeah.
I'm like, is Yarimi too? And she's like,
Yeah.
So I was like, even benefit something small
Yeah.
that changes my trading,
Yeah.
I'm going to be more than happy. Like,
Amazing.
I came here, I didn't expect, like, okay, my life's going to change.
Yeah.
But just something to help me do better or look at the market differently. I was like, that's a win for me.
Yeah. Feel like you got what you came for?
Yeah, definitely. Definitely feel like I got where I came from. Because that was the issue I had with the medium inducement. I was classifying the retracement. I forgot about that because, look, this is where you have to always keep journeying.
Yeah.
It has to be the Asia. And for the longest time now, since I've learned that, I haven't been looking at that.
Amazing.
So I'm definitely gonna pay more attention
For
into
sure.
it, and look for more inducements during my session and
Yeah.
catch these moves.
I appreciate you, brother. Lovely having you, man. Thank you so much.